Good morning. Today is Wednesday, March 8th. I am Damian White. I'm here with my associate Todd Graff, and this is the Gold Spot. Okay, Todd, well, let's get right into it. Today, there's a lot of stuff going on in this world politically. We know a lot about it right now. The main topic that the financial world is looking at is interest rates. Jerome Powell, the head of the Federal Reserve, the chairman of it, testified in front of Congress yesterday, said that inflation is a real problem. Inflation is becoming entrenched, and they're going to have to raise rates maybe higher and for longer than they had originally anticipated. That kind of caused some shock waves through the financial markets, and we're starting to see a lot of issues with all sorts of assets across the spectrum. But higher rates are really starting to affect some of the most solid assets that we've had in history, mainly being hard assets and real estate. Todd, can you maybe extrapolate just a little bit on how that's affecting things and what that's making some of our clients and just people in general do when they're repositioning their assets for future investments?
Yeah, Damian. So, I mean, everybody knows that interest rates are going up and they're going to continue rising. That's what Jerome Powell was talking about yesterday. So when you step back from it and look at that, you know, any industry where there's a lot of debt, you know, any industry that's grown a lot recently, the last 2-3 years because of debt, is going to suffer the most. So when you look at that, real estate market has grown. Everybody knows that houses have gone up in value, you know, greatly in the last few years. A lot of that is due to low interest rate, easy money debt. You know, people were able to take out mortgages. Well, now that interest rates are going up, you know, anybody that's refinancing, moving, anything like that, they're looking at much different monthly payments, you know, and then combine that with the fact that we're seeing tons of layoffs. You know, people are getting to the, you know, credit card debt is at an all-time high. So people are getting squeezed from every angle. You know, the low interest rate free money debt is no longer here. And I think that's going to continue, and that's, you know, prices are going to have to come down with real estate.
It seems that what's happened in the last several years, the Federal Reserve has almost broken the actual housing market. It doesn't operate like it used to do. So we're looking at, I think it was around 80% of all current outstanding mortgages, all of them, were originated in 2020, 2021, or 2022. So the Federal Reserve has put all these mortgages on their balance sheet, but now they've done it at a place where the interest rates were, say, 3%. Well, now the housing market can't operate on its normal basis because interest rates in the real world are now at 7%. So we're coming across something that's never happened in real estate before, ever. And that's that housing prices are coming down while inventory is staying the same or going down as well. Generally, the inventory in the market would get flooded with properties and then prices would come down. Well, now this market cannot operate efficiently, but all the mortgages are at an interest rate that we may never see again. So what that's really doing is just putting pressure on all sorts of assets. The housing market is the biggest industry, the biggest economic growth engine of the entire U.S. economy. So once that seizes up, we've got big problems. So what I think a lot of people are trying to do now is get into assets where it is a return of your capital, not as much of a return on your capital. So gold is just sitting there right now. I mean, we're in a market where there's not a lot of price movement, but it's a store of value. So we're seeing a lot of people that are wanting to park money in there. You know, the real estate market has run its course, and there's a lot of money that's going to be squeezed out of that right now. So we're looking at big flows going into the gold market now from the retail and from other financial sectors, not just the central banks, which we've seen before.
Right, exactly. And the thing to remember too, you know, we're not selling people gold on margin. You know, gold is the opposite of debt. I think that's going to be the safe place to be, you know, as we see a collapse because of this debt bubble.
Yeah, agreed. Okay, so next time, everybody protect your capital, and we'll see you next week on the Gold Spot.